Welcome to the Dental Team Podcast. I'm your host, Kiera Dent, and I have this crazy idea that maybe I could combine a doctor and a team member's perspective because let's face it, dentistry can be a challenging profession with those two perspectives. I've been a dental assistant, treatment coordinator, scheduler, biller, office manager, regional manager, practice owner, and I have a team of traveling consultants where we have traveled to over 165 different offices coaching teams. Yep, we don't just understand you, we are you. Our mission is to positively impact the world of dental, and I believe that this podcast is the greatest way I can help elevate teams, grow VIP experiences, reduce stress, and create A-teams. Welcome to the Dental A-Team Podcast. Hello, Dental A-Team listeners. This is Kiera, and you guys, I am really excited because I'm bringing on one of my dear friends. I think oftentimes in business, they talk about the fact that these are dear friends or people that you really love. But truthfully, this guest is someone that is family. We have been really good friends. I swear we were siblings in another life. Somebody I trust my financial well-being in his hands. I trust my own personal life in his hands. It is the one and only Ryan Isaac with the Dentist Advisors. How are you today, Ryan?
Oh, so good. One and only. Yeah. The relationship thing is really cool, though. I was on a call with a client today, and he was like, man, you must be really tired doing a lot of like talking to dentists all day long. And I'm like, yeah, it gets a little heavy sometimes, but it's really cool when you're lucky enough to have a career that revolves around relationships with people that would be your friends anyway. And it just makes, work so much better. So yeah, shout out to all the great relationships in the dental industry, including the Dental A-Team, of course.
I agree. It's interesting because I always say Tiff's the relationship person and I'm the more like business person. But you're right, because I think if you don't have relationships with your clients and you just see them as clients, it's not fun. It's just business. Whereas, I mean, I have a friend and she's coming, it's a client and she's coming into Disneyland. So we're talking about it. I'm going to meet her there. Ryan, we're going to see you in Disney since you're super cool and you live in California now.
So cool. Or super broke. One of those two.
One of the
Probably
two.
Both at the same time. It's both.
I just love that Ryan and I both just got back from being on trips. Ryan just got back from Fiji. I just got back from Hawaii, and you guys can't see us on Zoom, but both of us are itching. My sunburn is surely peeling.
My shoulder itches. Yeah, my shoulder's itching.
We're both sitting here itching like we've got leprosy. I feel like I do. Skin's falling everywhere. But Ryan is my personal financial advisor and advises a ton of our clients. And something I have really loved is I didn't think I needed a financial advisor. And Ryan, you have been super instrumental in my life and our growth. And I remember you telling me, like, Kiera, you don't actually need to. It's just a matter of, do you have the willpower to invest consistently on your own? And I just loved that was always your mindset. So you've spoken with us a ton of times. We have a ton of mutual clients amongst Dentist Advisors and Dental A-Team. I think it's a good peanut butter jelly duo between the two. But Ryan, kind of, if people haven't heard of Dentist Advisors, just give a quick snippet of like what Dentist Advisors even is about before we dive into stock market and how you can protect your assets. Because I know I want to know. Like, advise
what's
me,
going
advisor.
on?
You've been off surfing. I don't even know.
I've been off surfing. What are you doing with my money? You're surfing all the time.
Who knows?
Yeah. One of these days
I saw my report from you, my first report from Dentist Advisors, all negative, straight up down. I was like,
everything's down. Everything's down. Which, if this was Costco, we'd all be stoked right now. Or Disney passes, or if this was Southwest annual flight sale that was 20% off, we'd be like buying flights like crazy.
It's true. It's a good point. So tell us about Dentist Advisors. What is Dentist Advisors?
Well, we're a financial advisor, a comprehensive financial advisor just for dentists. We started 15 years ago. We're what's called a no commission fee only fiduciary advisor. It means we don't work for any bank or insurance company. We don't sell any products. We don't earn commissions for selling anything. And we only work with dentists. That's all we've done. That's all we will ever do. And that's all we ever think about is just constantly building systems and processes around how do we help a dentist make smart financial decisions, avoid bad ones along the way of their career. And, my preference, like, it's kind of funny. I'm a financial advisor. It's my job. I've done it for a long time, but I'm most interested in the role that money plays in just having someone have a good life. Like, I'm actually, maybe I shouldn't, sometimes I say this, I'm like, I shouldn't say this out loud, but I'm actually not that fascinated by like a Roth IRA or what the stock market's doing. Like, that's all stuff I do. But what I'm fascinated by is how does somebody take money and finances and income and all the moving pieces, especially that a dentist has, and make a good life with it? Like, how do you actually enjoy your career for 20 plus years or 30 plus years? A lot of dentists work statistically till almost 70. So like, are you going to hate it until 70 years old? Are you going to enjoy it along the way? Are you going to look back and be like, I worked too much. It wasn't worth it. The money wasn't worth it. So I'm probably most fascinated by human behavior and how do you help someone strike a balance in their life where all this hard work and sacrifice and money and loans and all this stuff. How do you make it translated to something that's worthwhile? Like a life you're proud to have lived. And I think that's what's most important about money. Stocks, investing, real estate, profitability, those are just the stuff we need to pay attention to get there. But I ultimately think that it's just like, how do you have a happy, balanced life? But that's my bias, because I just always want to have fun constantly. That's like if you ever do like my horoscope or anything like that, it's like, you just want to have fun constantly.
That's probably what we get along. Dental team is all about having fun. So.
Yeah, that's all everything about. So that's, Dentist Advisors, we've created some proprietary processes and ways of doing financial planning to keep a dentist just super organized and kind of just always be tracking really important data points throughout their career and every single year. Some data points multiple times a year, just so we can always look at data and go, okay, let's let data help us make decisions, not our emotions. And we'll just be accountable to numbers throughout a whole career. And that way, we're more prone to make better financial decisions. So
sure.
Yeah, that's us.
I love it. And Ryan says that they are dentist advisors and they only advise dentists and the dental
but
team.
You're a client. Yeah. And yeah, to be fair, we do have, there's probably, I don't know if I had to put a number to it, it's probably like 5% of our clients are not dentists. And they're people
fair.
We've just met along the way that are like, hey, I'm not a dentist, but will you work with me? And sometimes it's a good fit and we totally do. So,
well, I think it's because I run my business very much like a dental practice, because that's the only business I know how to run. There's some different nuances, but you guys are a very similar company to my company. So that's why I thought it was a good fit. But I purposely chose you guys because, one, I love your style. Two, I love what you guys do. I love the clients that we have in common. And I thought, I want to go through the experience as a customer. I want to see what it's like. That way I can more authentically speak to it. And I will say, I've actually put more into investments. Yes, they've gone down, but it's fine, Ryan. I'm not upset about it.
It is fine. And we'll tell you why the math tells you it's fine. It is fine. But more than fine.
It's just having that accountability person. I think I do a lot of things really well, but I didn't even know how much I should be saving. And for me, Ryan, you and I have talked so many times about, I think I get scared of, like, when am I ever done? Like, how much do I need to save? How much do I need to have? What do I need to? And I think that that's a question. And so I felt like as a business owner, I just sit on a hamster wheel all the time, which I'm sure a lot of clients feel, a lot of people listening feel of, I just have to keep working. And if I don't keep working, I'm going to go broke and be like homeless is literally where I go extreme to. I'm like, if I stop working, I will be homeless and on the streets and I won't be able to even like afford to eat.
Pretty worst case scenario.
Like that,
it's
that
like
is Kiera Dent's in my mind of like, oh my gosh, if I ever stop or if I take a break or if I take a vacation, which I think really a lot of people have.
No, it's really common. And probably the most successful entrepreneurs out there in the dental industry have that personality. I mean, that's what got them to the level of success that they are. The downside to that is that, there's kind of you might be missing the switch in your brain to turn it off every once in a while. Or like you need some outside reassurance besides the bank account or besides that year's revenue to tell you that everything's okay. And that's really common. Yeah, that's insanely common. It's actually quite surprising to me when we start working with a new client that's already pretty advanced in their career and doing really well, tons of money and lots of savings, and they paid off debt, like everything you'd want. And they're still kind of freaked out about if they're doing okay. I mean, I've met people with literally millions of dollars in liquid investments, no debt, practice doing millions of dollars, 55% profitability, just crushing it. They have like balance in their life, and they're still like, I don't know if I'm doing okay, and I don't know when I'm done, and I don't know when this thing's going to be enough. And so it's always that's fascinating to me because those people are successful without our help, but when we come in and then organize their whole lives to start just breaking things down into chunks, like, here's income over here, and here's your net worth over here, and here's your assets, and here's what's growing and what's not. And and you add some organization to someone's life, and you're like, okay, here's the math of when you're okay, and the math is telling you you're okay. I've seen people get to that point and finally have it measured and be like, it changes them completely.
Mm-hmm.
And then it's crazy because I've had clients go through that. They realize that they're totally fine, that their hard work has paid off. They're finally organized. They've got some accountability to someone and someone else to put work onto their plate. And then they'll go like start more practices because all of a sudden they're like, oh, I'm done. Oh, sweet. I'm having a ton of fun now. I'm going to go. And then they just start like crushing even more than they were before because now it's fun.
Mm-hmm.
It's not mandatory, it's optional. They could quit tomorrow if they wanted to. And then they'd like keep going out of pure fun and have even more success. So it's kind of funny, just the mental, emotional, you just like let that off your shoulders when it's finally measured. And honestly, the same goes for the other side of the coin. We work with tons of new dentists out of school, and they have like a negative net worth of, negative $1 million.
Mm-hmm.
But just measuring that and go, okay, here's where we're beginning, and here's what we can do. Here's what we have control over. It almost has the same effect. Like it's just a huge relief. And like, okay, good. I knew I had a ton of debt. I wasn't making enough money. I'm not saving anything. I'm really stressed. I feel like I'm spending too much. But maybe that's all true. But putting it on paper and just admitting it, it just feels good because it feels like a starting point. And like, okay, now I have control and I can move on and I know what to do. And it feels good.
Well, I think
ignorance is not always bliss.
Ignorance is not. I think about you and I presented pre-COVID, and I remember you talked about the rattlesnake example, and I've shared that so many times of like, the people in the study, they knew under a rock, they could figure out if there was a rattlesnake under it or not, and it would like shock them. So it was like this video game. And I still remember you talking about this, of how when people could figure out the patterns of which rocks had the rattlesnake, even though they knew they were going to get shocked, their stress was substantially lower than what it was if they didn't know what was under that rock. And there was this uncertainty of, is there a rattlesnake or is there not? Am I going to get shocked or am I not? More so than the ones when they knew they'd get shocked. And I just think that that's what it is, of the stress of not knowing, the stress of wondering, because I think we're our own worst enemies, where when I'm like, okay, got it. Here is my plan. No matter what it is. I know you told me, and I was like, Ryan, there's no freaking way I can save that much. And then I was like, oh, okay, I can do it. But just having somebody, like you said, map it out, give a plan, I think, and then also tell me, am I doing good or not? I know a ton of clients work with us because like, Kiera, is my practice good compared to other practices, or is it not? And I think so many dentists want to just know, like, where am I at? Am I good? Am I bad? Am I systematized? Am I not? Am I financially secure? Am I not? I'll work on the plan. I'll figure it out. I just need to know. So with that, let's talk about stocks, because a lot of people are seeing their portfolios. I know for me, I'm like, what the heck, Ryan? Why not just sit on this cash? I'm losing money. Maybe I'm not going to hold it for the next 30 years. Maybe I will. But like, let's talk about it. Where is it going? What are some of the trends? I know you don't have a crystal ball, but like, let's talk about it.
Well, let's be real. If I had a crystal ball, and so it's a really common thing. You'd still
have your same life, Ryan, just so you know. If you had a crystal ball, you'd still serve every day.
But I wouldn't tell anyone about it. I would be like, I paint houses on the side, and then I would just make tons of money secretly, and I wouldn't tell anyone about my ability to pick stocks. I was just pulling up my app here because I read this article this morning on CNBC. Markets are down again today. And let's talk about some context about that. But it was some advice from Warren Buffett, and also Bogle from Vanguard, the founder of Vanguard. They were being interviewed, and they were pulling up some old stuff, and they were saying the same old stuff that no one really wants to hear. And look, I don't care if it's stocks, real estate portfolio, if it's a private business that you run, if it's your diet plan, if it's your exercise plan. We're not patient people, and we only want results that go up positively, constantly, instantly. And so, that's what we want as humans in every aspect of our lives. But the advice is like anything worthwhile. Stocks are just an example of like, the businesses you run, or if you're a real estate investor, anything worthwhile is just going to take a long time, and you got to take the ups and the downs with it the whole time. But let's give some context. So what day is it? May 18th? Yeah.
Yep.
So we're recording this May 18th, 2022. I have to say these things for like compliance, just to like state like the things on the data I'm giving.
That's fair.
I got my little stocks app here. I'm looking May 18th, 2022. I'm looking at the S&P 500. So, do you know how much we're down this year? Let's do a little quizzes here, Kiera. How much is the S&P 500 down? Now, let's give some disclaimers. What is the S&P 500? It's the 500 biggest stocks in the United States. Is that people always say that's the market? It's not the market.
No.
It's 500 out of like 15,000 stocks worldwide, but it's a good indicator of kind of some of the bigger companies in the US, and it's a benchmark. It's an index. That's why we use it. What do you think the S&P is down, wild guess, this year?
I have no idea.
It kind of peaked
for
everyone. It kind of peaked late last year, and then since January, it's kind of dropped this year.
Maybe 10 to 20. 10 to 20% down.
The range. Okay. We're down 18%.
Yeah. That was I was going to cheat and grab my phone, and I was like, I'm going to do a real guess. I should know these.
So, okay. So, while we're on this subject, how often, we're down 18%. How often does the market go down this much? Would you guess?
I thought I heard it's like once every like 8 to 10 years, and we've been going for, I think, 13 to 17. Again, I don't really know those numbers, but I think it's that. Like there's, okay. I would guess, for me, I've almost thought it's like just a little less than a decade is how often it drops, but I could be totally wrong.
Yeah, you are, but that's okay.
That's okay. At least I'm being honest on here.
You are being honest, and this is how everyone. Okay, so the problem is that stocks are really unique in that people assume they go down, but they assume they go down like not that frequently, and then when they do, everyone's like, something's totally broken. What's wrong?
If I'm giving you my real answer, Ryan, I would guess that they actually drop. I know they drop a lot, like all day long. So it's like up and down, up and down, up and down all day long. But it's, I think, people looking at the general trend of like how long is it staying that low?
Yeah, and that's variable too. So for the last century, using S&P data, the market drops. You said 10 to 20%. So let's start at 10.
Okay.
A 10% drop is what's called a correction, which is funny to me because you'll see this in the news. And this is like, it's so manipulative. It's not fair to the average person. They'll be like, a correction is coming. Well, a correction of 10% happens on average in the last century once every 11 months.
Wow.
Oh yeah. So like when the next time you open your news app and it's like a correction is coming, you're like, yeah, stupid. So is Christmas every year. Like it's every year.
It's on the same day as my birthday every year.
Yeah, it's the same day as your birthday. Yeah. Yeah. So like, don't pay attention to that. Just be like, of course it is. Stop trying to make me scared, stupid news media. Right now we're almost at what's called a bear market. A bear market is when a market will drop 20% or more. So a bear market happens every 4 to 5 years on average for the last century. So, it's kind of like, I mean, it's not perfectly every 4 to 5 years, but it's on average happening that often. So it's kind of clockwork. So to see it happening right now this year it's not a surprise.
Hello, Dental Team listeners. What would it take for you guys to just completely and utterly change your practice? Like truly, if you think about it, because for me, I know oftentimes it's just having somebody right by my side, pushing me along, holding me accountable, having somebody to spin ideas off of. And honestly, that's all it takes most of the time for us to go from good to great. Usually it's taking the knowledge that we learn and actually executing it. That's why I would love to invite you to join our Platinum Virtual, where we do a coaching call, a Zoom team training. We invite you to our community, and we just really dive deep with you. We're that partner right by you to help you go from good to great. So if you're wanting to join, take your practice to the next level, and you know it's time for you to implement, execute, and go to that next level, email us hello@thedentalyteam.com, and I would be so excited to welcome you as our newest Platinum Virtual member. Can't wait to see you there.
A crash, which would be defined as something like 30% or more, happens about once a decade, like you said.
Okay.
So a crash. But again, news media will use terms that sound scarier than they were. Like a correction sounds pretty scary. A bear market sounds like horrendous. A crash is not good. But look, things move so quickly these days that here's the relationship between stocks and news is really you can't use news to know when you're going to trade stocks. If you go back to like just COVID, all right, March of 2020, the market itself dropped like almost 40% within like 3 weeks. It was insane. Crazy. It was so fast. It was a very stressful time for everybody. So we have a full on crash within like 3 weeks, and then but it's like back again. It was done and over and fully rebounded within a month, So the problem though is by the time that market was climbing back up and like super aggressively, like shooting back up, the news was still because I mean, what was the news in April or May of 2020? Do you just generally remember, Kiera?
I thought it was going down because it was COVID. Like everything was falling
what
apart.
was the news in May of 2020? It was horrendous. It was like, oh crap, this is worse than we thought. Everything's shutting down. No one's working. Government doesn't know what it's doing. Like, but the market was already on its way up.
Right. And it was better than it had been. Like people didn't expect that at all.
Yeah,
like,
no.
At all.
Yeah, no. Like, let's just give some context here. So going back to the S&P, let's go back to the bottom. Is so terrible. So March of 2020, let's just go. I don't know. I mean, how far do you want to go? Like the end of the year, dude, from the bottom in March till the end of December, it was up almost 50%. What was the news still in 2020 though? It was terrible.
It's terrible. Don't invest. I didn't invest because I was like, oh my gosh, everything's going to fall
apart. The news. I'll wait for the news. So here's what I'm saying. Here's my advice to people is, and this is Warren Buffett's advice. I couldn't find the article. I read it this morning, but it's old news. Is
don't listen to news, right?
Yeah. If you're tempted to be the person who says, I'm just going to wait for some signals to get in and out, and I'll get out now because it's clearly bad, but I'll get back in when like things are looking better, you will miss it. You will miss it by probably years. The same thing happened in 2008. The market was down like over 50%. It was just catastrophic. And it started its rebound in 2009. When was the news good back then? The news, people were still scared. I remember this so clearly because our business had just started. The news was still like apocalypse is pending until 2012. And then 2012, the market had gone straight up for 5 years. And people were like, maybe the market's too expensive now. Now, maybe, I mean, it was crazy. So my advice is just don't play. If you're going to be an investor in real estate, in a dental practice, in stocks, you're in it for the long haul. You do not possess the ability to get in and out. Nobody does. Okay. Nobody does for long periods of time. And so just don't play the game. You will hurt yourself so much more. And the news just, it'll be like off by years. So by the time the market has totally corrected, your signal to get back in, if you've gotten out, it'll have passed you by years. The news is always bad. So it's like, anyway. Okay. So back to the thing, corrections once every 11 months, bear markets once every 4 to 5 years, a crash once every decade. Okay. Now let's play some happier games though. What do you think the S&P is up over, let's say 2 years?
I feel like you told me, oh gosh, I don't know, over
Wild
2
guesses.
years.
Doesn't matter. 2 years. So we're talking back
I want to say 30%. That's the number I'm thinking, which I'm probably wrong. And people are probably laughing at me.
No, that's really good. 34.
Dang, I'm doing great at this. I should play the prices right more often.
You should. Okay. What about 5 years? Well, let's pause there. Is a 34% return in 2 years a good return?
I feel like it's a great return, but I think, Ryan, this is my piece, because I'm like, okay, you're going to tell me it's good, but the fear is that's great, but it can always fall out. And so
it will.
You're going to tell me
it will.
Okay, great. So
yeah. Okay, what's 5? How about 5?
Well,
what's
with
the
COVID in there
return?
going up 50%, I would guess over 5 years it's probably I don't know. I still think I'm going to stick at my like 30, 35%. It could be
5
wrong.
years is 62.
Shoot, I should have guessed
65, sorry. 10 years, we'll go one more. 10 years. What do you think the S&P 500, basically the biggest
75.
stocks in the United States? 203%.
Shoot, I'm bad at this game now.
Now the last decade, since about 2010, has been exceptionally good in the United States.
Correct.
If you went the previous 10 years, the rest of the world was doing better than US. My point in all this is, unless the world ends, unless literally every publicly traded company, like the computer company we're using right now, Zoom, the Apple phone you're holding, like the gas you put in your car, the car you drive, everything, unless all of those companies go out of business, the stock market will just keep doing what it does, which is go up over long periods of time. And absolutely it goes down. Here's what I was going to say that is really helpful though, is most of the people we work with, and you're in the same boat, Kiera, are they're what's called in my industry accumulators. It means you're in the saving phase of your life and you save money every month, right? Sometimes a couple times a month. I do the same thing. Every 2 weeks I get paid, right out of my paycheck goes into my investment accounts, 401k and a brokerage account. What this means is like, since January is when things started coming back down, we've been buying at a discount. So every month that you're saving, so like if I go to this year, in the month of January, you bought at a 5% discount when you save money. In the month of February, you bought at another 6% discount. In the month of April, actually, you paid a premium. It went back up 6% in April. So then you bought them a little bit more expensive compared to March. But in May, when you save money in May, you've been buying at a 10% discount. So like probably the biggest weapon somebody has besides sticking to something is being consistent. And the only way to like capitalize on these times when markets go down, and it's not if, it's when, and it's constant. They're always doing it, like we said, is to constantly save every single month. It's called dollar cost averaging.
Yep.
And that's the reason why it works, is because previous to this year, everyone was buying at premiums. They're buying expensive stocks. And trust me, like people complain on both sides of it. Like people are mad when stocks are expensive because then everyone's like, they're so expensive. It's all-time highs. They're going to fall soon. And then they fall. And now we've got a 20% discount buying opportunity. Everyone's like, I don't want to buy. It's too scary. Like, well, when do you want to buy that? Do you want to buy when they're expensive or cheap or just in the middle road, you know?
Sure.
So people like you and me and our clients that are saving every month, even when it's going down, this is totally how you win, because when it comes back up, like if you just bought stocks right now at a 20% discount and then we get back to where it was, which it will, and then it'll just keep going. You just built in a 20% return right there when they return, unless the world ends. Unless all these companies go out of business and they don't exist overnight, then I don't have a plan for you anymore. I don't know.
I don't have a plan for you.
Grab a surfboard and go surf and then it's all over. So that's what I would do. Like it all ends. I'm just going to go surfing until it's all done.
Which I think is wise. I think it's really good. Maybe this was the quote. I found a Warren Buffett one while you were talking is he advised investors, be greedy when others are fearful.
Oh yeah.
And which again, we've all been hearing. He said that's funny because for the past years, investors' mood largely seemed anything but fearful, which I agree. I'm like, okay, it's high, it's high, it's high, it's high.
Yeah.
But I think like you said, so many people sit on the sidelines. I know I did forever, just sitting on the sideline, waiting for the dip to get into the game. And so I would ask Ryan, just for everyone listening, what is the percent? Like if I'm shooting for the stars, it doesn't matter. I mean, I think students should have a different plan than a well-established doctor, just like I think team members should have a different plan than say their doctor. What is a good percentage? I think I know what you're going to tell me. So it could be a trick question. What is the percentage of my income that I should be putting into investment if I can? Like what's my best case scenario?
Yeah. What do you think I was going to say?
I think you're going to say it depends on what you want, what your lifestyle you want it to be is going to determine how much you should invest to get to your goals and by when you want to be done. True. That would be my guess.
Timing your goals, that's a true thing. I would also say that it depends. The percentage depends on your income. So let's say for the average dentist, if I just had to say a blanket statement for the dental community, and probably I'm speaking more to practice owners, I would say that you need to save 20% of your gross income every year.
Okay.
That'd be a blanket statement. For some of that demographic, though, depending on a few factors, income might be a little lower, and I would say 15% is a great goal. For many of those people, income's way higher, and you need to be saving 25 to 30%. And you might wonder why, and the reason is this is just how we work. The more money we make, the more we spend, and the more money you get used to spending now, you will spend in retirement, which means your nest egg needs to be that much bigger to accommodate. I mean, someone who's spending 10 grand a month is a very different net worth that they need to build than someone who's spending 20, 25, 30 or 50 or 60 grand a month. I know those people. They spend a lot of money, you know? So if I had to give a blanket statement though, I would say save 20% of your income.
And that's gross, guys. That's not your take home pay. That's your gross
income.
So, which I know, I was like, Ryan, you want me to do that much? Plus I had to pay for freaking taxes and I have to like pay for my life. I was like, forget it.
It's going to hurt a little bit.
I'm going to go get a tent. I'm not going to live in a house. I'm just going to give up my life. I'll be
Joke's
poor.
on you, folks. You got a house and you
not yet. I'm
travel.
still in an apartment. I mean, one day I might have a house. Ryan gave me advice. This was several years ago. He said, Kiera, if you're not going to live in a house for 5 years, don't buy it. So I've been sitting in Reno for 6 years now without a house because I did not think we'd be here for 5 years.
And what did I do over that period of time?
Ryan buys a house in Arizona, gives me this advice while he's in Arizona, and less than 2 years later, sold it and moved to California that has even higher taxes. And I was like, cool.
Yeah.
But that's fine.
It's true. I didn't
I'm still
take that
living
advice.
in Reno.
It wasn't the plan. But you've piled up more cash than I did.
Possibly.
By living there. I guarantee that.
Well, I also.
But no. So it's totally right. But that's a great question. How much should I save? That's your gross income, like you specified. 20% of your gross income. We always joke on our podcast that if like we say the phrase 20 for 20. If we just get every dentist to save 20% for 20 years, every dentist would have the opportunity to retire sooner than they can. And right now, the ADA's statistic is that dentists are retiring at age 69, which is up from 67 from the last time they measured. It's increasing, which I know there's longevity in the field of dentistry. Some choose to do that because it's fun and they like it. And I mean, if you're healthy and young and you want to work a day a week and still make $100,000 a year, like where else are you going to do that? Why not?
Right.
I would do it, but it's not all by choice. So 20 for 20, guys.
Okay. So things I'm taking away from now, and then I'm going to ask you one rapid fire as we wrap up. I think advice for right now is going to be just get in the game and start investing. I know it's going to be up and down, but over the course of the long haul, which Ryan, talking about buying a house and not buying, if you're going to be in your house for less than 5 years, don't do it. But when it comes to investments, are we looking at 5 years, 10 years, 20 years on average that people are in the stock market? Like, what is that number? Because I think that's like, I'm like, I'll get in when it's high, but what if I want to retire in 5 years compared to wanting to be in it for 20 years?
Yeah. So I would say the stock market, particularly, you got to give it like anything less, like any single digit years is just too unpredictable.
Okay.
But when you go further out, like if you looked at the whole history of like the S&P 500 again, the number of negative 10-year periods, like rolling periods every 10 years that happen, I'd have to look it up, but it's like very, very few. 15, there's no 20-year negative periods. So it's like, you give it that much time. But I think that applies if you're a real estate investor. I mean, look, if you save up a down payment, you're like, I'm going to buy a condo and I'm going to rent it out. Well, the last 3 years of real estate are a total exception. Okay. Right. It's been absolutely nuts. And if you happen to like buy and sell, which I did, like it was a total crapshoot. Like I was lucky enough to live at a time, like when I wanted to move, it just happened to coincide with an insane rise in prices where it was like, oh, I've got the equity. I can move to this house and then I can go. It was a total crapshoot. It was pure luck, I didn't do anything for that.
You just were living your best life, Ryan. That's what you were doing.
Living my best life. I was living in a van for a while out of Arizona.
Is true.
And then my house inflated like ridiculously. I'm like, this is stupid, but I'm going to take the money and then I'm going to go live in California. So aside from that, most business, real estate, or stocks, you've got to give it a couple decades, Okay. That's just, the exception might be flipping something. Don't worry about flipping stocks. Flipping real estate's an actual profession. But we're not talking about that. But I would say like, think of it as in decades. If you need to grow money or have money back, let's say that within like single digit years, the stock market's probably not the place to put it.
That's fair. Yeah. Okay. So then my last question for you as we wrap up is, what advice would you give right now to dentists, to team members, to whomever you want? I know you guys primarily work with dentists, so we can have it. What advice would you give that you think is, I don't care. I don't care if it's relevant to today's number. Like what one piece of advice would you give people right now listening that you think would be the most beneficial?
My financial planner brain would be like, invest in your business. For you practice owners, you dentists, like best investment you'll ever have. For team listening, I would say invest in yourselves, and that could be all kinds of things, whatever that means. My 42-year-old like midlife crisis brain is like, work and money is always going to be there, and you can always get more money and more work and work more hours. Just find a way to have a happy life, like live in a place you want to live and have don't wait to like start hobbies, like don't put it off, and don't wait to like go see places of the world you want to see. Don't wait for those things. Find a way to get them done and integrate them into your life sooner than later. That's what my like midlife crisis old man brain would say.
Like that. I like that brain, because I think so many of us delay, but I always think like, Kiera, would you regret going to Maui like you just did?
No.
If you were killed in a car accident tomorrow? I'm like, the answer is absolutely not. But I would regret like crazy working
giving
all the time and never being with my family and saying I'm not going to do these things. Like those things I would regret. So I like that.
You can't like get those experiences back. So like, it's kind of hippie of me, but I'm like, just do it. Just live. He
also lived in a van. So take it or leave it.
I did. I actually spent quite a few nights in a van over the course of a year and a half.
You told me the best place to go because it had a shower, and I was like, he legit is in his van, ladies and gentlemen.
Oh, I figured out. Oh yeah. I figured out. All you needed is a bed, and then just park near a place. And there's great. Anyway, I got lots of tips. DM me, and I'll tell you how to like live out of a van.
So on that, if you want to learn how to live out of a van, if you want to learn how to live your best life, or if you want some financial advice and you are a practice, I recommend Dentist Advisors all the time. You guys also have a podcast. So Ryan, if people want to connect with you, best way to connect with you, learn more about you guys, what is it?
Yeah, website, dentistadvisors.com. We have a podcast that's been going for 6 years called the Dentist Mone Show. Like anything you'd ever want to know, the way we think or what we teach our clients or the way we work is on that podcast. There's probably 1,000+ hours of free video content and audio content in there. So dentistadvisors.com. And then you can book a consultation on there too and talk to one of us. So
cool.
We'd be stoked to hear from you. I got a question for you, rapid fire. And we'll end
ask this.
What is, and this is from personal experience right before the podcast. What's a deadlier thing to have in your house? A package of like full-blown double stuff Oreos on the counter or a package of those new little thin Oreos on the counter?
Thin all day long.
That's way deadlier, right? Because I ate like 15 of them and I was like, and then I looked at the package and like, whoa, yeah.
Well, yeah,
that was a lot.
100%. But the thin are better because if you look at the calorie count of the double stuffed, like I don't really love the like middle.
They're monstrous.
They're monster.
Oh, you don't?
That's not my favorite part. And so for me, the thins are even better because it's perfect, less calories.
More cookie. Yeah.
More cookie, which I always prefer. I would like, especially double stuff, I like twist it and like wipe half of it off because I felt like the ratio was wrong. Yeah.
Who are you? This is a revelation.
I prefer the mint ones, the thin mint dipped in milk.
That's fair. I can get with mint. I agree with that. Not liking the inside of a double stuff though. We need to like continue this conversation.
It's just like Crisco. That's why I don't like. I feel like I'm just like Crisco.
I also do this with Costco muffins. You know, the giant chocolate ones. I'll go in the kitchen and I'll cut off like a slice and I'll eat a slice and I'll come back and cut off another slice.
Yeah,
and I'm
like, feel like it's less and it's less.
It's less, but there's 2 muffins down. So all right, glad we solved that.
All right, guys. So you guys can email in to me and Ryan about, is it double stuffed or thin?
Yeah.
Do you wipe off half of it? Do you agree that it's Crisco or do you agree that double stuff is better? Like email in, guys. I'd love to know. hello@thedentallyteam.com. But Ryan, love you guys. Check it out. Yeah. I strongly advise. I refer to you guys all the time. I think you guys are very just sound. You're not the crazy either direction. I like that you're middle of the road, which to me gives me a lot of security. It's not crazy, but I do love the 20x20 is a simple state to go.
Yeah.
Every team member could even do that. So take a look at it, guys. And Ryan, thanks for your time. Thanks for being in my life. It was fun.
Thanks, A-Team. Till next time.
All right, guys. As always, thank all of you for listening, and I'll catch you next time on the Dental A-Team podcast. And that wraps it up for another episode of the Dental A-Team podcast. Thank you so much for listening, and we'll talk to you next time.